Well, good morning, everyone, and welcome. I'm so glad that you could virtually join us on the Zoom for St. Louis Regional Chamber's COVID-19 briefing on the CARES Act. As all of you know, the outbreak of COVID-19 is having a profound impact on our region's community, its businesses, and governments. The historic passage of the CARES Act provides key tools and assistance for businesses and nonprofits that have suffered from the pandemic. This legislation is essential in sustaining our businesses while we continue to our region's road to recovery. As always, the St. Louis Regional Chamber remains committed to serving as the convener, a business resource, and an advocate for our members, our investors, and the community partners during these very, very challenging times. Good morning, I'm Tom Chulik, President and CEO of the St. Louis Regional Chamber, and today I'm very excited that we have three fantastic speakers who will discuss the CARES Act and what it means for our region's businesses. Senator Roy Blunt and Congressman Rodney Davis will discuss the historic legislation and what to expect from Congress in the future. After their briefing, the U.S. Chamber's Justin Lumadue will give a presentation on the CARES Act major provisions and its implementation. I would like to thank all of them for taking time out of their schedule to join us on this virtual meeting this morning and for their continued support of the St. Louis region. And now I want to pass the baton on to our Vice President of Public Policy, Austin Walker. Austin?
Thanks, Tom. I would now like to introduce the senior United States Senator for Missouri, Roy Blunt. And as you all know, the Senator has been a champion of many St. Louis Regional Chamber priorities and has been a stalwart in Missouri and the St. Louis community throughout his entire career. Please welcome Senator Blunt. Senator, the floor is yours.
Austin, thank you. Thank you, Tom, for both of you for putting this opportunity together. Let me just mention the three broad things we tried to do in the third package responding to coronavirus, COVID-19. The first would be the direct payments to people. Those checks should start going out soon, though they'll be more like direct deposits into most accounts than they will be checks. Most Missourians will get that check, and if they made less than $75,000 for an individual or $150,000 for a couple, they would get that maximum check of $1,200. It declines a little bit after that until it gets to right at $100,000. And at that point, there's no money available in direct payments. But most Missourians will get that payment. And again, like I said, if you filled out a tax form and given an account number where you like your refund to go, and I think most people are asked to do that whether they think they'll get a refund or not, that amount of money will go right into your account. In a traditional family of four, two adults each getting $1,200, two kids that would qualify getting $500 each, that's a $3,400 check that will go into that account sometime, hopefully, in the next couple of weeks. Social Security recipients, many of which fill out a tax form, but many of which don't. For those who don't, they'll combine the Social Security list and the tax list, and if you didn't get your money that way, you'll get it directly the same way I think you get your Social Security check. Part two would be those small business loans, the so-called paycheck protection loans designed to keep people on payrolls of companies that have less than 500 people. And there's been a lot of interest, a lot of questions about that. And then critical industries like aviation in St. Louis and travel everywhere would be included in that critical industries piece. And then the healthcare piece, the piece I would have put together as the chairman of the Appropriating Committee on Health and Human Services. It has CDC, Center for Disease Control, and the National Institute of Health, and Dr. Fauci at Infectious Disease has been there a long time, a good friend of mine, somebody I've worked with a long time. That is about $170 billion, $100 billion of which would go directly to hospitals. I think hospitals will start getting some of that money as early as the end of this week. That money is designed to really replace a lot of the work that hospitals were asked not to do in February and March and even now into April on elective surgery and other things. Hospitals are money in, money out kind of organizations, and the money is still going out as hospitals get ready for COVID-19 patients, but there's no money coming in from their normal flow of income, and that $100 billion will go almost exclusively to hospitals. Another $16 billion go to personal protective equipment. One of the reasons hospitals have been asked not to do those elective surgeries is to hold on to the personal protective equipment that they had, understanding that they would be in dramatic need of that if cases begin to increase, as they have been in the St. Louis area for several weeks now. So that part of this, the effort being made to look for tests that will not only test where you have it and make those more available, but also test. I spent a lot of time on this the last 2 days with the FDA and FEMA and others, trying to encourage that we get a test out there quickly that monitors whether somebody has had it or not. It's generally believed that a significant number of Americans over the course of the last 90 days have had this. They may have mistaken it for what was, in their view, a light case of the flu or something. But there's also a growing view that if you have had it, you can't get it again. At least you can't get it again in the foreseeable future. I certainly see that as one of the big steps toward getting people comfortable, getting back out into the economy, comfortable doing the work they do, maybe comfortable sending your son or daughter to college next fall to live in a dormitory if you know that they've already had this and are likely immune. That test should be readily available. Let's say it should be available by the end of April in some places, and readily available to the tune of hundreds of millions of people in our country able to take that test sometime between now and Labor Day, and kind of a growing ramp up to where that test is available. And the government will pay for that test just like it's paying for the test of whether you have it or not. That was part of what we did in phase 3 as well. But let's go ahead. I know Rodney's coming on later. Rodney and I, Davis and I, work a lot together. I chair the committee in the House that kind of runs the daily operation of the Senate. He's the top Republican on the committee in the Senate that does that. He's the top Republican in the House that does the same thing. And so we have lots of opportunities to work together on any Capitol Police problem or any architect of the Capitol problem, or just what doors are going to be open at a time like this when we're obviously not in business as usual. So Austin, if you want to go to some questions, I'd be glad to try to answer a few. And I know you've got 2 other speakers coming up, and I want to allow time for them.
Thank you, Senator. And for those on the call, Senator Blunt's been a champion of many healthcare issues during his career in the U.S. Senate, and we're lucky to have him as one of our region's representatives in Washington. And Senator, I want to go back to a year ago when you helped create the Infectious Disease Fund, which helped during the early days of the coronavirus outbreak. Can you speak to the foresight of that fund and the impact it's had on the current crisis?
Well, I did help create it. Actually, my good friend Tom Cole, who's the leading Republican until a year ago, was the chairman of the committee I chair on the House side. On the Senate side, really was the major advocate of that $105 million we just have available through this fund for the Center for Disease Control to use to be able to rapidly respond. It turned out to be unbelievably timely, and having that money available to them in January of this year. You know, we think this is a disease that no human has ever had before. Consequently, the term is often used, the novel COVID-19 or the novel COVID virus. There are a lot of COVID viruses. This is one we think nobody has ever had before. Having that $105 million available made a big difference. And in one of the bills that we've passed since then, we made another $600 million available in that fund, and it gave us a head start that we wouldn't have had otherwise. I don't think you'd put $700 million in that fund in a normal year, but having some amount of money that CDC can immediately turn to and say, we've got an emergency and we need to start right now with that emergency, and they were able to do that.
Thanks, Senator. So there's also been much talk about a fourth phase. Leader McConnell's quoted as being in the wait and see camp, while Speaker Pelosi and President Trump want to move forward with the plan. Where do you fall? Is it too early to be talking about another package?
I think I'd be closer to the wait and see camp, but what I was saying the week we were voting on package 3, and remember we did one package that was almost exclusively healthcare response, research response, another package that was almost exclusively how do you help encourage people to stay home the 2 weeks they might be infectious, when we thought that was part of the answer. And then this packet, but while we were doing this one, I said, this is so big and so broad-based, and it has to happen so quickly that there'll clearly be gaps. There'll clearly be things that when we look back at this, even a few days from now, we'll realize we should have done this a little differently. My view, Austin, would be that the best thing to do in late April, when we come back to Washington, assuming we're able to and decide to come back in late April, would be a quick cleanup package, and then begin to talk about the next package, which would, in my view, I guess, be phase 5, which needs to look, I think we're better if we do phase 5 in late May and mid to late May, where we have a sense of knowing, are we beginning to move out of this, or do we need to do many of the things we did in phase 3 one more time? If the economy looks good, if people are getting back to work by Memorial Day, there's probably no reason to do another direct payment. But that we will know more about that a month from now than we know today, or than we will know 2 weeks from today. There may just be too much pressure from both the House and the White House to go ahead and look at what Speaker Pelosi is talking about as another $1 trillion bill. I would just say, if we spend $1 trillion, we sure need to do our best to know what we're spending it for, because whatever we do in April and early May probably won't be the last thing we do that gets us through the summer. And so let's clean up phase 3, and then let's get busy on looking at what the current situation is when we get to a month from now. Just think how different we are right now than we were 2 months ago. What we're doing right now would have seemed totally unacceptable 2 months ago, that we'd spend $2.2 trillion responding to a virus. But we've got this two-front war. One is fighting the virus. One is trying to be sure that we're doing everything we can to stabilize our economy, so when we get through the virus part of the crisis, at least the winter and spring part of the crisis, that we're in the best position possible to get the economy moving quickly again.
So, Senator, when we've met over the years, an issue that you've continually brought up, unprompted, I'll add, is global food security. That topic seems to have increased relevancy during the crisis. So can you explain real quick, why is that important to our region, and how can we ensure that Missouri is well positioned?
Well, I have brought it up a lot, and what's the world food needs and what's going to happen in world food demand and world food need is pretty incredible. By 2050, world food demand, we believe, doubles unless there's a truly cataclysmic event. World food need, just the food you have to have, doubles by 2060. And frankly, I think we're beginning to see what happens right now. If you go to the grocery store and the shelves aren't full, when you begin to wonder if you have enough food processing workers to process the food, and do you have enough people growing the food, to have twice as much food available 30 years from today as you have today is a pretty incredible thing. And of course, nobody is better, but I say, of course, nobody is better positioned to be a leader in this than we are. more plant scientists within 200 miles of St. Louis, right where your office is, than anywhere else in the world. A great health food corridor that helps us be a leader in that part of this, but also a great worldwide distribution system that in many ways Missouri is the hub of, a location really important to us. That's why if there is a transportation component, an infrastructure component to the next phase of what we look at as we think about how we move out of our current challenge, is critical to Missouri. I've often said a good transportation policy is important to the country, but it's more important to us because our real advantage is location. The railroads, the interstate highways, the river system that comes together right where we live is critically important. And I think people are beginning to get a glimpse of the challenge of what happens if you go to the grocery store and everything you'd like to have isn't there. So we're maybe getting a little early indication of how important it is that we get ready for that moment.
Senator, finally, you've said the coronavirus pandemic poses the greatest threat to Americans that we've seen in decades. What can small businesses and families do to help their fellow Americans?
Well, I think, Austin, the first thing they can do is follow the guidelines. Be thoughtful about who you're visiting, be thoughtful about your own personal activities, try to maintain that social distancing when you can. When you can't, try to have some assurance that the other people that you're working with or whatever you're doing have also been thoughtful about what they did. This is a person-to-person transmitted disease, or person to surface to person. So follow those guidelines, be thoughtful about that. I think that when we do have an opportunity to have that test out that will determine whether you are likely to be immune from this disease for a while or not, taking that test will be a good thing. Not being reluctant to share that test with your employer or your faith leader or whatever, to know that you could do some things that others don't do. Right now, don't take people that might have been exposed to this to see other people who are in much more health jeopardy than you are. So this is a time when not every grandchild should be visiting every grandparent. And we just need to be thoughtful here as we work our way through this, and thoughtful as we try to begin to get the disease behind us and the economy in front of us headed in a better direction.
Absolutely. Well, Senator, thank you very much. We really appreciate your insight and your leadership, and thanks for joining our partners in the business community on the call today.
Great to work with you. Not only is Rodney an important part of our regional delegation, but really our Missouri congressional delegation, House and Senate, works as well together as any delegation in the country. We meet every month. We look beyond politics and try to get things done. Congressman Clay and I do a lot of things together. Certainly Congresswoman Wagner and Congressman Lumadue and I do, but our delegation is strong and close. Senator Durbin and I just put something in this CARES 3 package to where we're going to look at our supply chain for health and have the National Science Foundation do a quick study of what kind of alternatives do we need in the future, so we don't find ourselves in the position that some other country decides they're not going to provide us with the pharmaceutical product we need or the personal protective device we need. But the whole congressional delegation is working together here. I think you'd be proud of us if you can see what we're trying to do every day, and everybody is working hard.
Well, thank you, sir. We really do appreciate that bipartisan, bi-state collaboration. That's what we're all about, and we really appreciate what you're doing for the state. Great to work for you, and great to be with you this morning. Thank you, Senator. Take care. And now joining us is the United States Representative serving the 13th Congressional District in Illinois, Congressman Rodney Davis. Currently in his fourth term in the United States House of Representatives, Congressman Davis's district covers 14 counties in central and southwestern Illinois. Congressman Davis has also been a champion of the regional chamber's priorities and remains committed to helping our region during these challenging times. So please welcome Congressman Rodney Davis. The floor is yours, Congressman.
Hey, thank you so much, Austin. And I want to thank Tom, Adam, and the entire St. Louis team. You guys have been great. I also want to again thank my colleague, Roy Blunt, Senator Blunt. He's a great partner to work with, somebody I've enjoyed getting to know since I've been serving in Congress. And he's right. You know, you guys have a great delegation in Missouri, and we've got a great delegation that represents you in Illinois right across the river. Our old guy, John Shimkus, guy I worked for 16 years. We're going to miss him. But you can't ask for a better leader than somebody to give guys like Mike Boston these sage advice. So proud to be a part of the St. Louis regional delegation and really proud to work with you guys. Hey, look, I'm not going to rehash a lot of what Senator Blunt said about phase 3, about our attack on COVID-19. But a lot of folks forget this is the third bill that we passed to address this issue. The first one, really key. We invested hundreds of millions of dollars, $400 million in the potential for a vaccine. That put the United States on a path early back in March. We're looking ahead at leading the world to develop a vaccine, which is what we need to address this unprecedented pandemic. But the second bill, the second phase, we were able to put together a paid leave program that really helped those small businesses get a dollar for dollar tax credit if you were above 50 employees and below 500, so that you could give your employees that paid leave and keep them on payroll. Because at the time we were debating these first two bills, remember, we were following an outbreak in China and Southeast Asia, where the Chinese weren't open with what they had had on their hands in places like Wuhan. The quarantine cities larger than New York City. And at the same time, we find out they tried to corner the market on all privately produced personal protective equipment globally at the same time, by trying to purchase 2.4 billion pieces. That put us behind. We as a federal government, we need to take a step back after this is over and Monday morning quarterback at that point in time what we should do differently so that we have a better national stockpile, that we have a better response to a pandemic, because frankly, we haven't been hit with a pandemic like some other countries have. We avoided SARS. We avoided H1N1 on a national scale. We avoided Ebola on a national scale. We weren't able to avoid this one. And now we know what we should do better. But phase 2 was able to create that program of paid leave and also some flexibility in FMLA. It's not going to put businesses out of commission. They're going to be able to take a dollar for dollar tax deduction if you're one of those small businesses. Now, phase 3 came at a time when we saw our economy that was at historic growth rates and historic low unemployment. Remember, it was everything Senator Blunt and I and every member of Congress on both sides of the aisle had ever promised our country we would get to. Historic low 3.5% unemployment, historic economic gains. And in less than a month, we saw our economy turn into a disaster. That's why phase 3 was necessary. Roy said it, and I think when you saw that Senate vote, because this third bill was the first one to start in the Senate, when you saw that first Senate vote, you saw people like Ted Cruz vote for a $2.2 trillion spending package. Who would have ever thought that would happen? But we are in unprecedented times, and it called for an unprecedented response. And many of you on the call are going to be interested. Obviously, you work for some larger companies in the 4003 program that's available that we created to help provide bridge funding for some of our largest employers in the metro area and the Metro East and the St. Louis area. But a lot of the questions I'm getting from a lot of the members that are smaller companies are on the 7A program, the Paycheck Protection Program that we've created through the Small Business Administration. Most of my time over the last week and the weekend has been talking to small business owners, talking to bankers, talking to even CPAs about how the federal government's going to administer this program. But while we were answering those questions for them, I had to remind everybody to take a step back. 11 days ago, we passed this bill in the House after it was passed a few days before that in the Senate. That was a Friday. It was signed into law by the president that same day. And in a week's time, this administration, the Trump administration, working through our local financial institutions, our banks, our credit unions, they implemented a $380 billion program to keep our mom and pop shops, our Main Street businesses that are hurting the most, that rely on walk-in traffic in every community, large and small, throughout the district I serve and the districts every member of Congress serves. They're the ones that are going to capitalize on this. And the Treasury Department, and the Small Business Administration, they got that program running. It had a few kinks. Absolutely it did when it started Friday. But you know what? Over $100 billion has been obligated right now to those companies that are looking forward to keeping their employees on their payroll, looking forward to getting that bridge funding to get their company and business open again once this crisis ends. That's a Herculean effort at Herculean speeds that I've never seen the federal government do. And I want to thank all of those, especially Secretary Mnuchin. This is a guy who I talked to numerous times, members of Congress, both sides of the aisle, talked to numerous times. I was on the phone with one of my committee chairs yesterday, a Democrat, who was singing Secretary Mnuchin's praises on being available and accessible to address concerns. That's what we need right now. And unfortunately, what we've seen sometimes is a little bit of Monday morning quarterbacking by state and local officials and even by federal officials when we all should be rowing the boat together, fighting this crisis. And we'll Monday morning quarterback this thing to death once it's over, but no level of government, no politician, none of us for decades did the job necessary to fight this pandemic. But it's our job now, those of us who are in positions like ours, and Senator Blunt and others, it's our job to make sure that we have a better response the next time a pandemic occurs. Look, I want to answer your questions, Austin. I can sit and filibuster with the best senator that there is, but I want to make sure that you guys get the questions answered that you need, that you may not have gotten to with Senator Blunt, and happy to be on for as long as you need me, buddy.
Thank you, Congressman. Really appreciate it. And I'll stay on the same subject. On the day that the House passed Phase 3, or the CARES Act, for those listening, you gave an impassioned speech on the House floor. And you brought up that your first vote in Congress was aid for Superstorm Sandy, and that Main Street businesses that make up your district are being hurt the most by this outbreak. And many of them could be on the call today. Is there enough help going to our Main Street businesses right now?
Well, there's more than we've ever given at the federal level before. Remember, we've never had a loan forgiveness program come through the Small Business Administration. Loan forgiveness in the past was you defaulted, and then it made sure you didn't have access to credit later to do something else. Now, this is through no fault of your own, and we've created this program that's going to allow you, if you keep your business moving forward, you keep your employees hired, you pay your rent, you pay your utilities, those things that you need that cash flow, that bridge loan for, you're going to be eligible for 8 weeks of forgiveness on that loan. That's unprecedented also. It's an unprecedented response to this unprecedented event. But that morning, I flew out of St. Louis to go to Washington to vote on this package. I took the 6:05 flight out to DCA, and there were 4 total passengers on that plane, including my colleague, Mike Bost. So 4 of us were on that plane. And I said on the floor that day, if you don't think the airline industry is hurting, use it right now. It is on the brink of collapse. We had to do something to make sure that our global national society was able to rebound once this is over. But you mentioned, I did say one of my first votes was for Superstorm Sandy relief. And as somebody who represents the Mississippi and Illinois River basins, I know that disaster recovery is the best thing that the federal government can do. And frankly, I said on the floor that day, if there's one job we should do and do well, it's to help Americans recover from disasters that they didn't ask for. And we are in the midst of the biggest economic disaster of my lifetime, and I'm 50 years old. This is unprecedented. That's why we had to pass that bill. I flew back that afternoon on the 244 with a whopping 8 passengers, including Mike Bost and me. So we've got to get out of this, and we believe we put America on the first step to getting recovered once we're able to defeat this virus.
So, Congressman, there's been a lot of attention, and rightly so, on small businesses under 500 employees in the federal response to COVID-19. Yeah. Do you think there'll be any attempt to help medium-sized businesses that aren't considered small or large corporation?
Well, we were able to make sure that there were some considerations for those medium-sized businesses on how they calculate their employees, and that was part of phase three that we weren't able to put into phase two. That was, due to discussions with many members of Congress who heard from their constituents on how best to address this issue. Uh, we we have large pots of money for larger companies that can come in and get access to funds too. But in the end, the key is let's make sure the backbone of our economy, those small businesses, are the ones that got direct access the most. Now, Roy talked about possibly a phase four to move some money around and then get into a phase five that will be longer term and we're able to get through this epidemic. I agree with him. The time now is to see how phase three is being implemented. The time we've invested hundreds of millions in a vaccine. Well, let's see how that progress is going before we just throw more money at a problem that's being researched right now. We've seen our paid leave program work. Let's see what kinks evolve in that paid leave program so we can fix it. Let's see what kinks are engaged and how much demand there is for the $380 billion in the Paycheck Protection Program. And let's see how much demand's out there still for those who may not qualify for the large and maybe a little bit too large for the smaller business programs so that we can target our approach to help those who need it the most. And that's our goal. And that's why I think we should wait. I've never met some of my folks that I serve with in Washington that have yet to want to talk about the next step before the first three are implemented fully. But that's typically what we have to deal with anyway. And what I want to make sure of is that we focus on the emergency at hand. Then we focus on the long-term economic impacts like infrastructure investment when we move into the future.
Thank you, Congressman. I want to be respectful of your time, but I do have one more question. You were also successful in getting your bill that allows employers to offer a tax-free benefit to their employees to pay down existing student debt into the CARES Act. What can you say to students or employers who will be impacted by this bill, and how will it help?
Well, this is a big deal. You know that a lot of employers, and we've talked with you, Austin, and the regional chamber folks about how important a provision like this is to tackle our student debt crisis. Look, I'm in Illinois, where Illinois' pension debt and Illinois' issues don't make our state able to respond to this pandemic as well. And I really believe another bubble that could burst in the future is the student loan debt crisis, where we have more money invested in student debt in this country than we do in auto and consumer debt combined. That's a big deal. Companies have offered 401ks, they've offered assistance to their employees when they graduate and come work with them, but they weren't ever incentivized to offer a student debt repayment like they were, let's say, tuition reimbursement. So we were able to get student debt for companies treated just like tuition reimbursement. And I think it's a good first step. And it's, deferred student loan payments are one thing, but long-term, being able to have your employees want to come back and work with you because you're helping to pay down student debt for them up to and tax-free for the first $5,250. That's something long-term that puts us on a better path to not have that student loan debt bubble burst. Then at the same time, it brings you as the private sector into what the student debt crisis is on an overall scale. Because when you create a program like this to help your employees, help them better get access to a 401k that they need to have to survive for their retirement. But if you can help your employees now, you then are able to hold the line on tuition increases because it's those same institutions that are coming to you to help them fund a new stadium, a new science building, or what have you on these campuses. But if you've got a campus that's asking for your company's money and your personal money, and you're seeing your employees that graduate from that institution with insurmountable debt loads, you're going to be the advocate to make them hold the line on tuition increases. So those are the things where we bring the private sector in to really holding the cost of college down also. And thanks for bringing it up. It was a great win, but it's one that I was hoping to pass without an emergency. And I hope to make it permanent too.
Well, Congressman, thank you very much. We're happy that that's in there, and we really appreciate your time and everything that you're doing for the state of Illinois and our region. Thanks for joining us and our members today.
Thanks a lot. Good to speak with you, and hope to see you guys again soon once this is over.
Likewise. Thank you, Congressman.
Thanks.
I would now like to pass it on to Justin Lumadue, the Executive Director of the Congressional and Public Affairs Division at the United States Chamber of Commerce, for an overview of the major provisions contained within the Federal CARES Act. Justin serves as the Chamber's Chief Lobbyist on financial services, trade, and travel and tourism. Thank you for joining us, and please welcome Justin Lumadue.
Well, thank you so much, Austin. First, let me start off by thanking the St. Louis Regional Chamber for hosting today and inviting me to join all of you to talk about these important programs in this really unprecedented time that we're in. If we can go ahead and move to the next slide. So we're going to cover the major provisions of the CARES Act, right? So this is the third bill that Congress passed related to the coronavirus. It was just signed into law on March 27th. So we're a little over a week into this bill that's slowly unfolding. Just at the top line, this is a $2 trillion package, or a $2.2 trillion package. Through additional leveraging that the Federal Reserve can do, we're actually looking at a $6 trillion package for this phase 3 bill. So we're talking about significant help that the federal government has taken and steps that the federal government has taken to try to put money into the hands of individuals and businesses at this time when they need it most. Most of my presentation is going to be about the impact on businesses, but I do want to hit just very quickly on two elements that affect individuals before we get started. The first of those is automatic payments to individual taxpayers, and I think you heard Senator Blunt talk about these. These are the direct deposits or checks, depending on what the IRS has on file for you, that the IRS is anticipating to start paying out as early as next week. So the deal here is to try to get money into the hands of individuals that might be feeling the heat of this and get some stimulus dollars out to them as soon as possible. And again, the latest that we're hearing from the IRS is that those checks of $1,200 per individual, $2,400 for joint filers, and an additional $500 per child for folks up to the various income caps. We'll start to hit those direct deposit accounts as early as next week. So we're excited to see that money start to go out the door so that folks that need it have it. The other one individual benefit that I want to highlight really quickly is the CARES Act does provide expanded unemployment benefits. So through this, we've suspended most restrictions on eligibility as long as the unemployment is related to the coronavirus. Further, the CARES Act would provide an additional $600 per week on top of the regular state benefit through July 31st. So that's a really important element. This is the federal government stepping in and providing additional monies on top of what the states are already providing. This eligibility for the enhanced benefit ends, of course, when the individual can return to work. And these benefits are provided through the state unemployment insurance offices. So you're going to the same place in order to tap into this expanded federal benefit as you'd be to tap into the existing state benefit. And again, the idea here is to make sure that individuals that need it have the money. So we can go ahead and hit the next slide. And so these are the major provisions that I'm going to run through, and I want to make sure that we're cognizant of saving some time because I imagine there might be some questions. So rather than do a kind of overview, we're going to touch on all these points, but we can go ahead and go to the next slide. Okay, so starting off, this next provision is for employers of all size that's included in the CARES Act. So first, we're going to talk about payroll taxes. Under the CARES Act, businesses have the ability to delay payment of employer payroll taxes, Social Security, between now and January 1st, 2021. So if you're an employer out there, this doesn't apply to the Social Security that you remit to the government on behalf of your employee, but it applies to your half of the payroll taxes on Social Security. So if you choose to do this delay, you can delay the entire amount that would be due between now and December 31st of this year. And the way that it would be set up is that you would have to then pay those amounts. The first half would be due December 31st of next year, and then the second half would be due December 31st of the following year. So again, this is a way of getting some added liquidity into the hands of businesses of all sizes that need it. Now, an important note to make here is this does not imply, this provision does not apply to employers who have loans forgiven under Paycheck Protection. So again, one of the things to think about as I go through all these provisions for businesses, as you're, I think it was Congressman Davis that pointed out, as you're trying to map out your plan of how to tackle this pandemic and your business's response, being aware of some of these interactions between these different provisions is pretty key as you look at the best options that are there for you. Next, I want to talk a little bit about the additional tax changes. In the CARES Act, net operating loss for 2018, 2019, and 2020 can be carried back for 5 years. It suspends 80% limitation, and it extends to pass-throughs and sole proprietors. Next, it accelerates recovery of AMT credits. It also provides the ability to elect to increase limit on interest deductibility to 50% for 2019 and 2020. And finally, the CARES Act includes the Qualified Improvement Property or QIP fix. This is a fix that actually extends back to the tax reform package that a lot of businesses that put in additional investments have been looking for, especially in the restaurant space. So this is a fix that's been included here. And I truly encourage all businesses to reach out to their accountants and find out whether any of these particular provisions can be put to use for them. What's important there is that a lot of those tax provisions on the bottom of that screen, a lot of those tax provisions don't actually interact with the Paycheck Protection Program. So it's not a this or that. So this could be another way of utilizing some additional resources provided by CARES. So next, and this again applies to all employers, we're going to look at the employee retention credit. This provision can apply to employers that have fully or partially shut down, or with 50% drop in gross receipts in a quarter compared to the prior year. It offers a refundable tax credit for 50% of the wages, including employers' health plan expenses, paid by the employer up to $10,000 per employee. For employers with more than 100 employees, this credit applies to employees not providing services. So if you've got 200 employees and 100 of them are able to telework, this applies to the 100 that are not able to telework because their duties don't allow it. For employers with 100 or less employees, this credit applies to all employees paid during the eligible period. So if you're an employer that has 90 employees, half of them are teleworking, half of them are not, you get this credit for the entire group that you have because you have less than 100 employees. This is another place that's important to flag because this employers are not eligible for this if they receive the Paycheck Protection loan. So again, as you're mapping out different scenarios and what works best for your business, it's just something to note. And understanding that businesses need liquidity now, the Treasury Department is developing a process for employers to receive an advance payment of this through a tax credit. So we anticipate that will be rolling out in the coming days and weeks as Congress is trying to drink from a fire hose and getting all of these provisions up and running. We can go ahead and flip to the next slide. So here we're going to touch really briefly on a few provisions that affect mid-size and larger employers. So the CARES Act includes $454 billion to the Treasury Department for loans, loan guarantees, or to support Federal Reserve credit facilities. It also includes special programs for the airline industry and critical national security businesses. So a lot of folks have heard about this, and as Congressman Davis pointed out, with the hit that the airline industry is taking, they basically set up a very specific grant program and loan program that the airlines can go and apply directly to the Treasury Department for. These provisions do carry restrictions on stock buybacks and executive compensation. And we're likely to see new programs through the Federal Reserve that will support lending by financial institutions to businesses rolling out in the days and weeks ahead. We can go to the next slide. So next we're going to talk about some provisions that affect small businesses, the self-employed, independent contractors, and nonprofits. This will really be the bulk of the rest of the presentation. So we'll start here with the Paycheck Protection Program. $349 billion was set aside for loans for small businesses, generally less than 500 employees, 501c3s, the self-employed, sole proprietors, and independent contractors. Now, I would note that there have been some exceptions to that 500 employee rule. One of the areas that's obviously been hit the hardest is in the hospitality industry, both hotels and restaurants. So they've changed the way that you can calculate those 500 employee elements so that it's per location rather than a chain that employs more than 500 people and then wouldn't be able to access any of the support. The Paycheck Protection Program provides for loans equal to the lesser of 2.5 months of average payroll or $10 million. The PPP has minimal requirements, no collateral, no personal guarantee. Most importantly, these loans are forgiven. They convert to grants equal to the amount spent on payroll, rent, interest on mortgage, and utilities for the 8 weeks after origination of the loan. I would note that because of the extreme demand for this forgivable loan program, SBA is requiring that 75% of the funds be used specifically for payroll, but the other 25% can be used for the other items I just mentioned. I'd note that loan forgiveness is reduced proportionally if the employer reduces the number of full-time employees, and loan forgiveness is reduced if employer reduces wages by more than 25%. For employers that have already reduced staff, they can avoid the reduction in forgiveness if they bring the employees back to work and restore those wages generally within 30 days and maintain those employees through June 30th. The program rolled out this past Friday with small businesses and sole proprietorships being able to apply through any financial institution that currently serves as a partner in providing existing SBA products such as the 7A loan, as well as a host of financial institutions that have partnered with the federal government to help provide relief under the PPP. So think Bank of America, Chase, Wells Fargo. Today, according to a statement from White House Economic Advisor Larry Kudlow, there are $50 billion in loan commitments and 178,000 loans being processed. Beginning this Friday, April 10th, independent contractors and self-employed individuals can begin to apply. And the SBA is working to bring additional lenders into the program as Treasury approves them. Importantly, they made a note that 30,000 additional banks, community banks, were added to the program over the weekend. The other thing that's really key here is that the Federal Reserve is actually standing up a facility in order to get additional funds to those smaller banks that need it in order to lend under this program. So this program's ballooning significantly, and I'm sure that there will be questions on this. There is already a buzz of concern about whether this program has enough money. I was actually looking at my email a few minutes ago, and Senator Rubio, who helped create this program and is the chair of the Small Business Committee in the Senate, has already called for additional funds. The U.S. Chamber sent a letter to congressional leaders today asking for assurances that additional funds would be added if that $349 billion is exhausted. So this will be something that we continue to keep a close eye on and make sure that businesses are able to get the support through this program that need it. We can go ahead and move on to the next slide. And so this is just a quick plug for more information on this particular loan. If you go to www.uschamber.com/SBloans, we actually came up with a guide that's a step-by-step resource in figuring out the PPP. Additionally, on our website, we have guides on a lot of these other concepts, including the economic injury disaster loan, which I'm going to talk about next, and a whole host of other things that you might find useful as you sort of plot out what your next step is for figuring out your support package. We can go to the next slide. So next I'm going to talk about the SBA Economic Injury Disaster Loan, or EIDL loan. Small businesses and nonprofits, including faith-based, with fewer than 500 employees, sole proprietors, and independent contractors are eligible for these loans. EIDL can provide up to $2 million in working capital for up to a 30-year term. It includes a 3.75% interest rate for businesses and a 2.75% rate for nonprofits. Payments under EIDL are deferred for up to a year. These loans are based on credit scores. No tax returns are required. And up to $200,000 can be provided without a personal guarantee. No collateral for loans, $25,000 or less. An important feature, these loans provide a $10,000 emergency grant, which is typically available within 3 days. And that grant does not have to be repaid regardless of whether the loan's been approved. The EIDL does interact with the Paycheck Protection Program, so that is an important note. If you've taken out an EIDL loan, you'll have to reduce the amount that you can have your PPP loan forgiven by $10,000. And application for these EIDL loans is directly through the SBA, so sba.gov/disaster. We can go ahead and go to the next slide. And I'm just going to very quickly cover paid sick leave, which was actually an element of the second coronavirus bill. Employers with less than 500 employees are required to provide 10 days of paid sick leave if leave is related to COVID-19. Sick leave can be taken when ill, when quarantined due to exposure, to take care of a sick or quarantined family member, or to take care of a child during a school closure. Leave is paid at the regular rate with a maximum of $511 per day if taking care of oneself, paid at 2/3 rate with a maximum of $200 per day if caring for family members. And payment up to the maximum is reimbursed by the federal government. Leaves in addition to what an employer already provides, and businesses with less than 50 employees may be exempt in certain scenarios. And obviously paid leave is not available if an employee can telework. We can go ahead and go to the next slide. So I'll also briefly touch on FMLA leave. This is again from phase 2 of the bill, or phase 2 bill of the Corona package. Employers with less than 500 employees are required to provide up to 10 weeks of paid FMLA leave if an employee needs to take care of a child due to a school or child care closure caused by COVID-19. Leave is paid at 2/3 of the regular pay at a maximum of $200 per day and $10,000 in the aggregate. Paid FMLA is in addition to any leave an employer provides, and the payments for FMLA leave will be reimbursed by the federal government up to the maximum. And again, the same qualifications apply here. It's not available if an employee can telework, and there may be exemptions for employers with less than 50 employees. And with that, I'm happy to turn it over and answer whatever questions you all might have. I know that there's been a lot of focus these days on PPP and the EIDL loan. So happy to get into more details on anything that you'd like to talk about.
Well, Justin, really appreciate it. So the rollout of PPP has had a rocky start, to say the least. What are you hearing from Congress or banks about the administration of the program?
Yeah, so, I think that at the end of the day, it has been a rocky start. It's really hard to stand up a program of this size and scope in a week. Again, I'm not trying to make excuses for the rocky start, but this is a unprecedented time, and these are unprecedented responses. So trying to come up with a program that they can get out to folks as quickly as possible and get liquidity into their hands, is certainly necessary. It hasn't been without flaws. But this is also a program that the federal government had a week to prop up. So I'm hopeful that in the coming days, we will see some of these issues smooth themselves out. I'm hoping that SBA is doing what they need to do on the back end to make some adjustments on their technology space to make sure that their portal continues to work. And we're also looking at additional resources and additional folks coming online. So this week we expect an announcement that folks in the fintech space will now be eligible to offer these PPP loans. So again, part of this is just a workload scenario. The more folks that we have as part of the program and partners to the federal government that can process these applications, hopefully the smoother this will become.
Justin, I want to touch on something that you mentioned earlier on, because we're getting certainly a lot of questions about this. Many small businesses are worried that the PPP money may be all dried up before their application's approved. So what advice can you give business owners? And, if the money does run out, I know there's been talk about this. Do you see Congress replenishing those funds?
So we are certainly hopeful that Congress will continue to commit to replenishing those funds. I know that in conversations similar to this with Leader McConnell and a whole host of congressional leaders, the one thing, while there's a lot of uncertainty about what phase 4 looks like, the one thing that I have continuously seen is that for PPP and EIDL as well, I think that there is a real commitment to making sure that there is enough money to help bridge the gap for all the businesses that need it. What is interesting, that $349 billion number wasn't picked out of thin air, although $349 billion is somewhat random, but it was based off of the non-governmental payroll for 8 weeks. So the numbers are based in some form of reality of what the expectation would be if you were looking at a 2-month shutdown. But we are hopeful that, again, congressional leaders will reiterate that there's an intent to replenish these funds.
Thanks, Justin. And this will be the last question before we go. But if we still have questions for many of our members on the call, which I'm sure we will, please reach out to Riley Nix at rnix@stlregionalchamber.com. We're going to try to get some answers for you. But last question, Justin. So we've been getting questions about how should independent contractors be treated for purposes of employee headcount and for payroll cost calculations.
Yeah, so independent contractors, if you are applying for PPP and you are looking at independent contractors that work for you, you should not be including them in your own PPP calculations. Rather, that independent contractor is actually eligible for a PPP loan on their own. So if you're the overarching employer, you wouldn't be including them. That independent contractor should be going through this process separately. And for independent contractors, they actually come online with the ability to apply for PPP starting this Friday.
Well, Justin, thank you so much for being available today and answering so many questions. And I know as your remarks carried, there's going to be more questions asked. So as Austin said, please be sure to send your questions into Riley Nix. So thank you everyone today for joining today's COVID-19 briefing on the CARES Act. I think we all know while our entire region faces uncertain time, it's actually terrific to see the continued cooperation and commitment from our elected officials on both sides of the Mississippi. Our region's recovery will depend on our ability to collaborate on innovative solutions like the CARES Act in order to sustain our businesses during and beyond this pandemic. So strong leadership from our governments and strong leadership with our civic organizations will be required as we embark on the road to recovery. So please join us for another Business Sustainability and Recovery series on crisis communication planning with Fleshman Hilliard's Rebecca Rausch, Chapman and Company Leadership Institute's Susan Conrad, and Switch's Josh Kell, and Explore St. Louis's Brian Hall. This virtual meeting will be held on Thursday, April 9th at 10 a.m., again on Zoom. And our speakers will talk through strategies on how companies can remain and even strengthen their brand relevance through the COVID-19 crisis. Again, contact Riley Nix if you have more questions or would like more details. Thank you again for joining our virtual meeting today. Meeting is adjourned.